Now, the last thing, and I said we weren't going to talk about it, but we are, one of the options you can do, and what people hope you can do, is inflate your way, or rather not inflate, you can grow your way out of debt. And if we can see from this chart, the forecasted 2010 growth rate for the US, Japan, United Kingdom, and Europe is only around 3%. But one of the hopes is that when you look in China, everyone talks about China, it's China this, China that, and you look at the growth rate in China, the hope is that that growing middle class in China and that strong growth rate is going to increase the demand for goods, and that the consumers in China are going to buy more, and exports to China is going to help other countries grow their way out of debt. And in fact, Obama has just recently said that their hope is that they would hope to add 2 million jobs by doubling exports in 5 years. So that's exactly what they're looking at. They're looking at exports to help them grow their way out of this. Can they do it? Well, if you can look, China here, I'm going to go back. China here, if you look at the household segment of GDP in China, it's 37%. Look at the US, it's 70%. So there's a lot of room for that household sector in China to grow, and it should grow. And in fact, what really should happen in the world today is China needs to spend more, and the US needs to spend less. And if that happens, then maybe this is an option. And I think longer term, it is an option. The problem is that if we look what's happening right now in China, China's got a bit of a housing bubble themselves. Residential properties last year in China were up 20%. They had record construction starts in November and December. Current prices have really accelerated in the major urban centers. They're pretty well, most people are priced out of the market. Only 20% of people can afford to buy in the major cities. And inflation itself has become a problem in China, up 2.7% year over year. China is now in the process of trying to dial back that growth, trying to stop that bubble, that housing bubble, from really taking hold. And the way they're doing it is they're trying to reduce lending in China. And they've increased the reserves that banks need to hold twice so far this year by 50 basis points a time. They've decreased the targeted loan growth in China to 18% versus 30% last year. And they've also changed the mortgage rules. You need to have 40% down if you're going to buy a non-owner occupied home. So China, can it be that engine of growth in the future? Possibly. Is it going to be in the next couple of years? Is it going to bail us out of this debt we're seeing right now? Probably not.